So the discussion this morning, uh, let's kick in. Were Brooke or Rachel, were you gonna do a little bit here at the beginning, or you want me to take it?
You can go ahead and take it, Rob.
Okay, all right. What we have here today, folks, I want to welcome everyone for joining us here today. This talk is largely going to be on business structures and tax basics, really heavy on the business structures aspect of it. And of course, this is put forth by the Meet to Market program. I've known Olivia now for several months, and we have several projects that we're working on right now. I guess it was nice that I saw Olivia at the IAC conference in Vegas back in December. Our program presenters today, I'm Rob Holcomb from the University of Minnesota. We'll have Rachel on the program a little bit later, along with our producers Aaron and Nick. Now, let's just look at what we, agenda wise, what we want to talk about here today. Of course, we're doing the introduction right now. I want to take a little bit of a time, and I don't want this to sound like a lecture under any circumstances. We want to have a discussion and just a conversation about, why a producer might want to consider forming a formal business entity. What are some questions that we need to talk about? The perennial question always comes up: how are these things going to affect me on taxation side of things? And that's my real strong point. And my challenge today is to not get that real technical, but we're gonna, what I want to do is my goal in this is to take complicated topics and simplify them for everyone so it's easy to understand. We're going to talk about as far as the different business entities, capitalization, which means, how do we put money into these things? How do we operate them? Do any of these have any benefits for transfer and estate planning? And how does it affect you for government programs? After that, we're going to hand the program over to Brooke and Rachel, and they're going to look at this more through a tribal lens, and we'll also have our producers talk at the end. Plus, I've got a case study question that we'll discuss a little bit, kind of have an activity that we'll talk about on this. Now, the first thing here that we really want to make sure that we get across is that this is our disclaimer. I mean, I am not an attorney. I have been an enrolled agent for over 20 years, and what an enrolled agent is I have a certification with IRS. Where I'm able to represent clients in front of the Internal Revenue Service. I had to pass a test when I first got this certification 20 plus years ago, and I'm required to get 72 hours of continuing education every 3-year cycle for this. So it's I'm similar to a CPA in that I don't have the ability to do audited financial statements, compilation letters like a CPA can do. But I do have a tax certification. It's real important that folks understand that when you're dealing with and forming an entity, there's going to be accountant stuff and there's going to be attorney stuff. You really can't form a formalized entity without having the help from both of those folks. Now, I do not want to disrespect any businesses that are out there online, but the online kits that you can go get to form yourself an entity online, I really try to steer everybody away from that, because if you are want to form these things, do it right, and secure the proper help in order to do that. And oftentimes it's going to require both the work of an accountant and an attorney on this. Now, as far as business ownership goes, let's just talk about this. And I guess I modified this slide from the original, so folks don't be shocked here. There's really a lot of congruency between overall business in the United States and farming business as far as the types of entities that you have. The most common and by far the most common entity that we see out there is a sole proprietorship, and largely it's the one that's been around the longest. It's the one that's the easiest to set up. It's easy to get out of it, and it's what most folks do. Now, one thing that people get really concerned about when you're talking about entities is the first thing they say is, well, I might have some liability concerns. And that's a perfectly legitimate concern. As farmers tend to have a rather dangerous job. I mean, a lot of times we're working with equipment or we're working with livestock. Either one can be unpredictable and can potentially be dangerous. So, it exposes the business to all sorts of liability. Now, just for instance, I grew up on a livestock farm in the upper Midwest. So I love working with livestock, but livestock can be notoriously they can misbehave. Livestock love to get out. I mean, we try to build fences to keep them inside, but sometimes livestock will get out. I've been rousted out of bed on numerous occasions in my life to have to go round up livestock because they got out. I mean, something happened with the fence or something along those lines. This is one of those liability things that can happen. I mean, if you say for instance, if somebody's cows gets out and somebody accidentally happens to hit it on the road and they're involved in an automobile accident or a vehicle accident of some sort, that can expose the farm to liability concerns. And if the accident's bad enough, even though the farm may have liability insurance, sometimes that liability insurance isn't enough to cover the potential liability in those cases. So that's one of the reasons why, from the liability standpoint, some folks, will use business entities to try and mitigate that liability part of it. Now, along those same lines, there's some tax savings that can happen with different entities. Some entities will offer you definite tax savings by forming that entity. Plus, we've got a note here on where it's adds credibility to the company. If you're say if you're selling produce and you form a corporation, that does make the business look and appear to be more professional and does add some credibility to that business. Now, the chart here that we see here, we have sole proprietorships, partnerships, limited liability companies, C and S corporations. Those are used business wide, outside of agriculture as well as in agriculture, and you'll essentially see those same businesses used in agriculture. Now, I would say, from where I sit right now, as a tax professional, probably the two hot ones right now for that I see more people forming right now than any others are going to be the limited liability companies and the S corporations, and we'll get into why a little bit later as we go through things. So when you think about forming an entity, you want to make sure that it's going to fit what you're trying to do in the farm business. And this is not on the slide, but this is probably the most wisdom I can shed on this. I think selection of an entity is easy if the farm business has a clear direction of what their goals are and where they want to take the business. In other words, if I have a producer that walks into my office and says, well, I want to save taxes, saving taxes is my number one thing, and maybe I have some liability concerns, that helps me steer them towards which entity that I might want to steer them towards. The other thing is it depends on how much complexity that the farming operation wants to put up with. Some of these entities have a lot of there's a lot of filing that has to be done. There's a lot of record keeping that has to be done. And as that complexity increases, some producers are okay dealing with that, and others would rather go out and do the farming. All right. So those are all things to kind of consider. So just in looking at daily operations, is it a good fit? As far as the decision making goes, this gets more into the partnerships, and when you start getting more than one person involved in an entity, is how are those decisions going to be made? What type of responsibilities do the owners have? We talked a little bit about the liability earlier, as well as the taxation. But these questions on the right-hand side here, I want to ask ourselves, is liability a concern for us? Now we have a webinar here today with where most everybody on here I'm anticipating is going to be a livestock producer, and possibly either selling to a plant or they're participating in some type of value-added processing. Of course, anytime that you're dealing with food that folks are going to take home and eat, I mean, there's always liability concerns with that. How will it be taxed? Who's going to own the business? Who's going to make the decisions? And then how do we form that entity? Okay, the types of businesses. Now we kind of broke this into 4 different categories, and let's just talk about this quickly. As far as the independent category, we've got the sole proprietorship, and the sole proprietorship is the longest standing. It's easy. It's just a single person that operates the business, and they file it on their own tax return. Now, the limited liability company can be a hybrid type of entity. You can have a single member LLC. So myself as a single individual, I could form a single member LLC. I get the liability protection of an LLC, but since I'm only one person in this business, I am I would essentially file it on my 1040. So there's no real extra filing that has to happen with that. Now, a limited liability company can also be multiple people. All right, let's say, for instance, that I wanted to bring my wife and maybe my kids into an LLC, and we form an LLC with 4 partners. All right, typically an LLC is going to operate like a partnership, and you can have multiple member LLC, or you can have the single member LLC, but the LLC gets you that liability protection. All right, now as far as the partnerships go, there's the general partnership, which is fairly simple to work with. Also the limited liability the limited liability company does default to operating as a partnership unless you decide to elect otherwise. You can elect to treat a LLC as a corporation if you want to. Most folks don't. There's also a family limited partnership. We'll talk about that a little bit later. The family limited partnership mainly exists for the preservation of generational wealth. Oftentimes, that's a tool that we use pass property from the exiting generation, the exiting farming generation to the incoming farming generation. And the qualified joint venture, that's a case of where you have to have a married couple that is farming together, and they both file their individual Schedule F on their tax returns. Now, corporations, there's two different kinds of corporations that pertain to this talk today. There's S corporations and C corporations, and we'll get into more detail on that a little bit later. But S corporations are a pass-through entity. They function very much like a partnership, and but you can have multiple owners with an S corporation, and actually they're considered shareholders once you get to a corporate entity. C corporations are pay their own tax, and then any earnings from that C corporation have to pass on to the shareholders either through wages, rent, or dividends. I mean, those are really the only three ways that you can get that money out of a C corporation. The nonprofits, we've got the nonprofit on the list here, and I work with a couple nonprofits that I'm personally involved with. The basis of a nonprofit is it needs to be a not for profit enterprise. I mean, one enterprise I'm involved with is the agricultural extension agents in Minnesota. We have an association that for our members of extension, and that gets filed under a nonprofit status. Also, there's a entity that forms our tax book. It writes our text for our 2-day tax course. It's a group of 30 land grant universities that put together a rather large textbook every year. That also operates as a nonprofit because it's not the intent is not to make a profit on that. It's more to provide a service. Cooperatives are what a cooperative is oftentimes, the most common cooperative is what we refer to as like a supply cooperative. Group farmers will band together and they'll form a cooperative, and oftentimes what happens is it's for either marketing a product that they have, or also they can use it for purchasing supplies, because a group of farmers, if they pool all their money together and they have one entity to buy, for instance, fertilizer or crop inputs or fence or any number of supplies, collectively they can buy the large quantities easier than they can the others. So cooperatives are also on here as well. So let's hit this. Let's hit these comparisons here real quickly, and I'm looking at my time here too. Okay, we're comparing a sole proprietorship with a limited liability company. Now, if you just look at these charts here, all right, the sole proprietor is basically limited to one owner. All right, where the LLC, we can have one or more owners. You can have the single member LLC, but in many cases you've got more than one. With the sole proprietor, of course, the owner is the decision maker in this. When you get into the limited liability company, if you have more than one person involved in the business, that starts to complicate the issue a little bit. Same thing with a partnership. I could form a partnership with a brother that, I might get along with a brother, I might not get along with a brother. But just bear in mind that, when you get into an entity with multiple people, you can have potential for conflict. The liability concerns, the thing to bear in mind on the sole proprietorships is that there is unlimited liability with a sole proprietorship, meaning if something happens where I happen to get sued and my liability protection does not cover all that liability, they can come after my business assets and my personal assets. Now, there's nothing that's going to protect your business assets from a lawsuit such as this. However, it's the personal assets that we want to shield. So with the liability protection that we're talking about is giving protection, making the wording that I want to come across, that I want to put forth is it protects personal assets from business liabilities. All right, that's what we talk about with liability protection. With the LLC, we are able to protect those personal assets. You do have liability protection with the LLC. Taxation wise, there is really no benefit tax wise for having an LLC. All right, it gets taxed essentially the same as a sole proprietorship. All the money, if it's farm income, it's all going to be subject to self-employment tax. And forming the entity, the sole proprietor, essentially you just file the Schedule F on the tax return, and you've got yourself a sole proprietorship. All right. For a limited liability company, you do have to register that with the Secretary of State in the state of your residence. Okay. So as far as taxation goes, as far as the sole proprietor goes, the taxation is real simple. The sole proprietor is going to keep track of income and expenses. That's going to be your set of books, and all that gets reported on the Schedule F. Schedule F is where farm income gets reported. Schedule C is where non-farm income gets reported. It just gets reported on the 1040. It gets taken care of all on one return. It's very simple, but again, no liability protection whatsoever when you're talking about that. Now, let's talk about the taxation on the LLCs. All right, if what an LLC defaults to what we refer to as a pass-through entity. All right, it functions just like a partnership. So the owners are going to have limited liability. They get liability protection from an LLC. Taxation wise, if you look at the here, let me get my laser pointer here. Okay, if you look here at this portion of the chart, okay, for LLCs, for most cases, you're going to have the LLC set of books. The LLC is going to file a tax return, all right, with total income, total expense, but the LLC is not going to pay any tax. What the LLC does is the LLC takes the money that it makes and it distributes it to the owners. All right, and that ownership percentage is based on the amount of capital that each partner put in at the beginning. So that money comes through and it passes through on a sheet of paper that we call a K1, and that reports the amount of income that each shareholder has to report on their individual tax return. That's why they call it a pass-through entity. But the LLC doesn't pay tax. It all flows through to the individuals. All right, and there's several of these that do look at that. Now, general partnership versus the limited liability partnership. It's the general partnership functions almost identically to the LLC, but except you've got unlimited liability. The liability for a general partnership is the same as what it is for a sole proprietor. So that's probably the main difference that you're going to find there. Now, your limited liability partnerships, this is a different entity that you can set up, where you can set up general partners and limited partners, and so if you have some folks that want to be in charge of the operation, and then limited partners that have limited liability, that's another option. Now, I used to think that LLPs were kind of irrelevant for agriculture, but now in the last couple of years, I've been seeing a lot more of them cropping up, largely in farming operations. But the general partnership, you don't have to set that up with the Secretary of State because there is no formal entity with a general partnership. However, with a limited liability partnership, you do have to file paperwork with the Secretary of State in order to get that chartered. Okay, family limited partnership. What a family limited partnership is, that's mainly an entity that is set up to preserve generational wealth. Oftentimes, what I've seen when those are set up is you have an existing farming operation with say several children involved, and what mom and dad do is mom and dad form this family limited partnership, and what they do is they gift a portion of the farm to all the kids each year in and year out. Normally there's one of the kids that's going to be operating the farming operation during this process. But what it is, it's a gifting process that you can use to gift that to the next generation. Plus the fact that it's closely held due to lack of marketability and also due to minority ownership, typically you can discount the value of that property, so it makes it easier to transfer that to the next generation. The qualified joint venture, this is one that I've noticed has been gaining some traction here in the last few years. A qualified joint venture, you have to have a married couple. All right, so if you have a married couple that happens to be operating a farm, no formal entity needs to be formed, but what they do is you keep one set of books, but when it comes time to file the return, you basically split the books in half, and the one spouse files half of the income and expense on one Schedule F, the other spouse files another Schedule F with half the income and half the expense on there. So what you've got is you've got two Schedule Fs that get reported on the same return. And the benefit, folks say, well, what difference does that make? Well, the difference it makes, the biggest difference I think it makes, is that this, if you set up a qualified joint venture, it does double. You can double the limitation that you have for government program payments. All right, there's that $125,000 limit on government program payments. There's a few exceptions to that, but this is one of those areas where you can double up on those program payments that you're eligible for if you were to do that. Plus, the 1960s model for filing farm returns was all the income got reported in the husband's name, and nothing ever got reported in the wife's name. Well, if you do it this way, both husband and wife are going to get Social Security credited to them. And I think that over time that makes it better. Okay, as far as the taxation of partnerships, this is almost identical to the LLC. All right, all income is going to be subject to self-employment tax, but what you have is the partnership is going to have a partnership set of books, and then whatever profits occur, the K1s are going to distribute that money on paper to those partners, and then that's where it gets reported on the income tax return. Again, partnership return does not pay tax. All right, the tax is going to get paid on the individual partnership return. Now remember, partnership has unlimited liability. There's no liability protection with a general partnership, but it's a flow-through entity, and this chart essentially shows anytime that we say flow-through entity, that means that the money comes through and gets paid on that individual return. Okay, let's talk about corporations here a little bit. Now, corporations are, folks, they're a living, breathing animal. You form a corporation, and with a partnership or with an LLC, if you have the death of somebody, it essentially it doesn't necessarily terminate the business, but it definitely changes the makeup of it. In the case of corporations, it doesn't matter. I mean, you've got shareholders that own both of these. Death of a major shareholder makes no difference at all. The business continues on. Now, the difference between these two types of corporations is the S corporation is a pass-through entity. It functions very much the same as the general partnership or an LLC for that matter. In that you've got, the S corporation doesn't pay tax. Everything, all the profits pass through to the shareholders in this case, much in the same way as that the partnership or the S corporation. Now, the C corporation. Okay, C corporation is completely different. The C corporation files its own tax return. It pays its own tax. All right. The only way that you can get money out of a C corporation is through paying wages, paying rent, and paying dividends. All right. So that's how the owners get money out of the C corporation. Now you're going to hear the term double taxation a lot with the discussion on C corporations, and the reason for that is as I mentioned, C corporations pay their own tax. All right, so if the C corporation made a certain amount of money, it's going to pay tax on that money, and then the monies that it distributed to its shareholders, of course, they're going to have to pay tax on that money that was distributed over the course of the year. Now, not to the that initially doesn't sound as bad as what it sounds, because oftentimes, when the C corporation, if the C corporation is paying wages or rent, those are going to be deductible expenses. So it's going to decrease the amount of tax that the C corporation is going to pay. Dividends, however, are not a deduction to the C corporation. So C corporations want to avoid paying dividends if at all possible, because it's not a deduction to the C corporation, but is taxable to the shareholder at the shareholder level. Now, we'll talk a little more on capitalization here a little bit later, but here, just looking at the flow chart here. Now, of course, the C and the S corporation have the liability protection that we've been talking about all along. It protects those personal assets from business liabilities. The C corporation is going to keep its own set of books. It's going to pay its own tax, but then wages, rent, and dividends that are paid to the shareholders, they are going to report that money on their individual returns. Now, as you probably are guessing about right now, once you get into corporate entities, the bookkeeping increases quite a bit. All right, as we look at the S corporation. Now, the S corporation, this is a pass-through entity. All right, S corporations are a pass-through entity. S corporations are not going to pay any tax. All right, it's an information return, and then the income that the S corporation makes gets distributed to the shareholders through a K-1. It looks very much similar to what we saw with the partnership and the LLC. There's one big difference with S corporations, however. With S corporations, the money coming through from the S corporation is not subject to self-employment tax. Let me say that again, because that's a key big thing. The money that comes through on the K-1 from an S corporation is not subject to self-employment tax. So that's a huge tax benefit. However, S corporations are required to pay a salary to those shareholders that to those shareholders in the S corporation. So and when you pay a salary or a wage to those shareholders, we're going to have FICA and Medicare withholding on that W-2. That's where the self-employment tax is paid with an S corporation. Now, where the tax savings comes in is the salary doesn't have to be exactly the same as what the profitability of the business was over the course of the year. There's a number of tools out there that can help you decide what that is, but that salary can be less than what the total profitability is for the business, and that's where the tax savings comes in with an S corporation. Let me back up here one on the C corporation. The other benefit that of a C corporation is with a C corporation, you can put stuff into the C corporation and take business deductions on stuff with a C corporation that you wouldn't otherwise be able to do with a sole proprietorship or a general partnership. It's not uncommon for a C corporation. They'll put the family residence in the C corporation, and then they'll depreciate it. And if they have to repair it, it'll be a business expense. Now, the bad part about doing that is that when it comes time, if you ever have to liquidate this thing, all right, it creates a huge tax liability to unwind that. We'll get to that here just momentarily. Other entity types. Let's talk about the cooperatives here. Cooperatives, it's just an association of folks. Typically what we see cooperatives is a lot of times they're for marketing purposes, or they're formed to help acquire supplies for the farmers to purchase. It's very common around where I'm at in the upper Midwest. A lot of grain that gets marketed through co-ops. All right, so it gets sold to the co-op, and it's controlled by a board of directors, and which are made up of the farmer owners in that. Your nonprofits, I mean, you have to have a nonprofit motive in order to do that. And typically there's going to be some type of educational or some type of benefit that comes out of those nonprofits. But let's look at the co-op structure here a little bit. So what the co-op does, the co-op actually can pay tax. Now, normally they don't pay much, because what they do, the money that they take in, the money that the co-op makes, one of the benefits of a co-op is that they can do patronage distributions, meaning that the profits that the co-op made, a lot of those profits end up going back out in the form of patronage refunds to the co-op members. That ends up being taxable on the co-op members' individual tax returns. So, and that gets reported on a 1099 PATR, or what we call a 1099 PATRA. The co-op files a return here, but then you've got those patronage payments that go to the individuals on that. Okay, as far as the tax exempt nonprofits, you typically have to have, now, as I said, I mentioned earlier, I'm involved with a couple of nonprofits. One is we have an association of our extension agents in Minnesota. We do educational. We have some educational meetings. It's a lot of it's professional development. We also pay a couple scholarships for undergraduate students at the University of Minnesota. So it's an educational need of sorts. The other nonprofit I'm involved with is writing a textbook, but nobody's pocketing the profits out of this or anything. What we do is, the goal is to produce this thing at a low cost, so that all 30 states that belong to this thing can utilize this textbook, and it's going to be a fairly low cost alternative. There's several different returns that have to get filed. There's the long form, which is the 990, the 990EZ, which is the short form, and the 990N, which we affectionately call the postcard. Although none of these are paper anymore, they're all filed electronically nowadays. But let's compare these one more time here before we break up here to shift gears. The C corporations. Now again, C corporation pays its tax on its own earnings, and then the shareholders get wages, dividends, and rent paid to them, and then that gets reported on their individual return. Because of the added things that can be deducted with the C corporation can offer tax advantages. All right. The main thing that I want to let you know is never, never, never put land into a C corporation. All right. Always keep the land out of a C corporation for the purposes of someday down the road, if you ever have to get out of that corporation and liquidate it, you can avoid a lot of built-in gains tax that way. There's huge tax consequences if you put an asset into a C corporation and leave it there for 50 years and then take it back out. S corporations are essentially a pass-through entity. There are tax savings also with an S corporation because the pass-through earnings are not subject to self-employment tax. All right, you have to pay wages, you have to pay a salary to those shareholders, but there's tax savings for both the C and the S corporation. Sole proprietorship, essentially open up a checking account and start paying bills and selling stuff, and you're a sole proprietor. There's not much to getting into that. General partnership, you just have to have more than one person in order to have a general partnership, but the profits and losses are shared. It's a pass-through entity. The limited partnership is where oftentimes you have general partners and limited partners. That's a case where you want to. The limited partners may just be an investor in the operation. The general partners are the ones that actually run the show, and then the limited liability company that functions much like a partnership, except you have the liability protection on that. Okay, other factors to consider here in the short rows here, folks. On the land ownership, remember with the C corporation, never put land into that C corporation. It just is devastating. If I had time, I'd tell you about it. I helped one liquidate here within the last couple of years. And they would have been much better off if they would have kept the land out of that thing. But the built-in gains tax is where you have assets in that C corporation over time, and when you liquidate it, the corporation pays tax on all that money, and then when it passes through to the shareholders, they pay tax on it again. That's where the double whammy comes in on that C corporation. Capitalization. We always have to wonder about, what are we going to put? We got to put some operating money into this thing. We have to put capital in that. If it's a farming operation, oftentimes we're going to have to put some machinery in there. You can contribute, most cases, contributing assets and money to an entity is going to be a tax-free event. All right, in most cases. Capitalizing that thing is that's something that's a definite consideration, because you just can't form an entity and then not have the ability to do the business. Estate planning. I'm a fan of the corporate entities when it comes to estate planning, because when you do the S or the C corporation, everything is based on shares of stock. We don't care about individual pieces of equipment or individual buildings or anything like that. It's all about the stock ownership, and oftentimes the stock ownership is easier to pass down than the individual assets. Government programs, just touch on this real quickly. Anytime that you get into a formal entity, any of the limited partnerships, limited liability company, C corporation, S corporation, you're limited to one limit for program payments. Now, there were exceptions with the CFAP program, here recently, but for all of the programs, Ark County, PLC, ARC Individual, all those programs. If there's payments that are coming out of those, there's one limit per formal entity. Now, if you have a sole proprietorship, one limit for the one owner, but if you have a general partnership or a qualified joint venture, you double it. You doubled it or tripled it depending on the number of, in general partnership depends on the number of folks that you have involved in that. Okay, folks, I'm going to shift gears here. We're going to hand the ball off here a little bit for the tribal lens discussion. And Rachel, were you going to take that or?
Yeah, thanks.
Okay.
Alrighty. Yeah, thank you, Rob, for guiding us through that, through the various business structures and the questions to consider when choosing a business structure. So this section of the workshop, we're going to focus on tribal businesses. So we'll go ahead and take a look at all the things to consider when looking at it from a tribal lens. So before we get started, as we all know, there are 574 federally recognized tribes within the United States, and they all come with their own government, their own structure. They enforce their own laws. So before we get started, I'll go ahead and define a tribal chartered entity. So a tribal chartered entity is an entity that is set up and governed by the laws of the tribe. Any entity that's set up under this tribe is required to follow the subjects put out by the tribe. So please note that there's no one size fits all for the guidance on tribal businesses. So next slide. Let me request remote access. Okay.
I'll let you request it, Rachel, while I'll go ahead and read what's on the next slide for everybody while you do that. So for this segment of the workshop, we're going to cover starting a business on tribal land could mean differences in formation of business and the project, taxation and other reporting, litigation, and programs and support. So I'll pass it back on to Rachel now that she has control. Go ahead. Wait, you're muted. Thank you.
All right. So yeah, we'll be having some discussions on, things to consider when forming your business, taxation and some tax benefits. And we'll talk a little bit on litigation and programs and support for tribal businesses. So let's see, let me skip over. Might be a Rob, do you mind going over to the next slide? I'm not sure why it's not working on my end. Alrighty, all right, thank you. All right, so we've came up some with questions to consider while establishing and formatting your business and your project. So when it comes to business formation, here are a few questions we want to consider. First, we want to see how the registration process is like. In some cases, first point of contact would be the tribe's economic development or the industrial park board or leasing manager. So some situations it's handled through a planning or education department, and other times you have to contact your tribal council directly. And how long do these processes take? It depends. Some tribes have created an approval process similar to any municipality, so which takes a project through, submission process. You're going to go through the legal and financial planning and the zoning. And then, it goes through tribal council for final approval. And the next question to consider is, where is your business going to be located? Is this location on trust land or tribal land? Or does your reservation belong to the tribe as a whole? Some tribes have allotted land, which requires signatures, AKA permission, on a lease for development, which adds time and some costs. And next, who handles these leases and approvals? There'll be some involvement from both the tribal side and the government side, which is the BIA. Business leases and grazing permits differ. So you want to make sure that, you're looking at both aspects of your business and your grazing permits. So some tribes offer land leases up to a maximum of 99 years, while others are on a 25-year lease term. Depending on the benefit of your local economic, depending on the benefit of the local economy, customizing lease terms can be negotiable. So you want to consider all those things when it comes to leasing your business. And then let's see. So an example would be, there's an issue between an LLC and a sole proprietor when it comes to holding a grazing permit. So you might want to file for a different separate entity to hold that grazing permit, depending on the situation that you're in. All right, and then so the next question to consider is, do you own your utilities? You want to compare your rates for utilities and things like that. So you want to ask for a utility analysis. Maybe you have an outside entity that offers a different rate, and you have your local reservation utilities. You want to consider the tax and other fees that come up with that, so that you're not spending money on things that you could save money on. So let's go on to the next slide. Okay. So the next set of questions we have here are, tax benefits and other reporting. So do I need to collect taxes for the sales made on the reservation? Tribal taxes are enforced by the tribe. So each tribe has their own, tribal taxations and things like that. And then the fees for the grazing permits are usually established by the grazing fee formula. So they're going to take all other things into consideration when filing your grazing permit and your taxes. So do I need to collect taxes on services or products outside of the reservation? So you're shipping products out of the reservation. So these will be taxed in multiple jurisdictions. You're going to be either taxed at your tribal level, and then you may be taxed at the state level. Depending on which state you're in, you may be taxed on where you're delivering the service, where you're shipping the product to, where you're doing the service, or you may be taxed on where your business location is at. So that really varies on where your location is. And then let's see. What taxes apply on the reservation? What benefits apply to your business on the reservation? So let's see. Tribal reservations are all subject to, the same requirements as other federal income tax. So there may be some tax benefits available to businesses that start or conduct wholly on the reservation. So first would be depreciation for tax purposes. First, you're going to have the ability to, file for short living and permits for faster depreciation on tribal equipment and things like that when you're on the reservation. So that's something that, you can look into. And then there's also the Indian employment credit. Generally, their credit is available for those that hire American Indians that do all their services on the reservation or near. So that really depends on what state you're in that you may be able to get those credits. I know that they're up to 20% or something, or around that range for that. And let's see, are there any differences for taxes if it's owned by a individual tribe member or non? So, and that will be for the, let's see, I'm sorry guys, my ear is giving me problems today. So there's going to be no distinct tax differences whether you're owned by a tribal member or if you live on the reservation. So regardless of the tribal status and the same for the living, no distinct differences on the federal income tax side. So next slide, please. So the questions here are over litigation. So how are disputes handled and how do I uphold my business? It's my tribal business. So you want to consider these things as, how are disputes going to be handled? Each tribe is set up differently. Some tribes do offer limited waiver, but this is usually seen when the tribe has an actual ownership of the business. So you'll need to check with your tribe on how to dispute with customers, partners, and others. So that's one thing to consider. And then make sure that your business is upholding the contracts and you're up to date on your licensing that are required by your tribe. And you're following all those requirements on the tribe, or your business can be avoided and your contracts can be voided as well. Next slide, please. All right, and then here's some questions to consider when it comes to programs and support. What values are important to my tribe as it relates to economic development? So most tribes, as it says here, will entertain projects that align with customers and principles and affords the greatest opportunity for self-sufficiency. Ask what business enterprises would be compatible with your community, so you get more support from your tribe and things like that. And the next question, are there any incentive programs or tax benefits available specifically for starting a business or on the reservation? So there's no set tax codes amongst all tribes, but some tribes, they set up their own tax benefits and own tax codes, depending on the nature of your business. So you're delivering a specific service that's beneficial to the community. You may be able to, get benefits that way. And then what financial options are available for new construction? So that's, something to consider. You can save some money and maybe some time on those. So some tribes have the financial ability to wrap up capital costs and, and TI costs and things like that. And they can put them all into a long-term lease, meaning you could, save on that initial investment when starting a business and put it to operations instead of spending it on land purchases and development. So those are some things to consider when setting up your tribal business. Go ahead and next slide. All right. So yeah, like Rob said, and we'll repeat it again, the factors may be different for all farmers and especially on tribal land. There's no one right structure and there's no one way to go about it. So make sure that you check with your tribal entities and things like that, and talk with your tax advisors to get the most correct information. Thanks.
Right, now I got it working. Well, thank you. And just to reiterate on that, this is probably one of the most important slides there is, because I get phone calls all the time. Small producer. In fact, I had one earlier this week, almost identical to what I'm talking about. Very small producer called up and they were concerned because they were selling broilers at at farmers markets, which they're allowed to do with state inspection here in Minnesota. And they were seriously considering about forming an entity, and they said, the first question was, what's the best entity? Well, it depends. I mean, the answer that depends. It depends on your goals and your individual circumstances. There is no magic key to make that all work. Okay, now what I have remaining here that I wanted to talk about here for my part of the program is we've got a little short case study that we wanted to discuss. And this is a case study that we've used in our curriculum here in Minnesota. Okay, what we have is we've got a farm here. We're going to lay out the structure of this farm. It's don't let the size bother you on this, but we've got a brother and sister that have separate farms. All right, but they also do some farming together. That's a very common thing. They might be sharing some machinery. They're helping each other out with stuff. So what we have is the case here of where we've got the brother, we got the sister. The sister has a son that also is starting to try and get into the operation. So what we have is we've got a brother, sister, and either a nephew or a son that wants to be involved in the farming operation. Now, what we want to do in this case is, and what we did before is, this was an upper Midwest example, so there was a substantial amount of money on this thing. Don't worry about the money piece on this, but what we want to do as far as the discussion goes is, I'm going to help you with the priorities. All right, the priorities for this siblings and son or nephew, that what they want to do is number one is they want to save taxes. All right, they want to cut taxes any way possible. They're really concerned about personal liability, and the family doesn't mind dealing with some extra record keeping or structure. All right, so if there's extra hoops that have to jump through, they're not really scared in that, and they're also interested in maybe setting something up to ease the transfer to the next generation down the road. So, given those priorities, what I'd like to do is give everybody a minute or two here. Think about the business structures that we've talked about and the things that we've discussed, and what entities do you think, and forgive me, can we just have those answers show up in the chat possibly?
Yep, we can.
Okay, let's put those in the chat. So again, what we're looking for is what type of entities do you think you'd want to look at if these were the priorities of the farming operation? They want to save tax. Personal liability is a big concern. Family doesn't mind dealing with some extra record keeping, and the family's interested in maybe setting up something for down the road. Okay, let's jump ahead on this because I think time is getting to be a concern. The two entities that would probably meet this criteria the best would be one of the two corporate entities. All right, because the S Corp and the C Corporation, those are really the only two entities that are going to save any tax, and and also we're going to have the liability. It's going to have some extra record keeping involved with it, and the family is also, the shares, as I mentioned earlier, is easier for passing that on down the road. All right, so with that, we need to get our producers on. Olivia, do I need to stop sharing then?
Yeah, that'd be great.
Okay, I will stop sharing.
Thanks, Rob.
I'm trying, there we go.
Okay. Hi, everybody. Welcome back to the big face screen. So we're going to go ahead and take a few minutes to hear from two different producers in two different geographic locations and tribal locations. So we're going to start with Aaron. And Aaron, we'd love to just hear a little bit about how you started your business, how you chose your entity, why you chose your entity, and any issues that you kind of came across or even questions that you had. That would be great.
Hello, everybody. So when we started Four Canyons Land and Cattle Company back in May of this year, and it was started because, we've always been involved in ranching our whole lives, me and my brother and my husband, and we got that passion from our dad. And me and my brother, I've been graduated from college for a while, and so my brother had recently graduated, and we wanted to legitimize what we were doing, I guess. And we started the LLC with the goal in mind of building it for growth and kind of setting into action things that we wanted. So we called it Four Canyons Land and Cattle Company because eventually, hopefully soon, we'll be able to buy our own ranch and operate it, manage it ourselves. Right now, we're a part of a cooperative and some other things, and ultimately, it's our goal to have control to have some land that we can manage ourselves. We also formed it in mind with having some flexibility and being able to do different things over the years. Why we chose an LLC is kind of funny because I worked for the USDA for a lot of years. I was a range management specialist. And in the field office I worked with off the reservation, a lot of the ranchers that I worked with formed LLCs. They were small businesses. And so I just kind of figured when we started that this is kind of how you do. That's how people did it. So I just decided to form an LLC. So we have an LLC. I'm the managing member. My little brother, Wade, is a member. My husband's a member, and so is my dad. So it's the four of us in this LLC. And we the most important thing for us was to be able to distinguish itself as its own entity and make it legit. I think a lot of people that we know on the Navajo Nation, when they ranch, it's kind of just when they are doing business, it's kind of done through like their personal checking account, and so your funds your finances are commingling, and so we wanted to make sure that we distinguished this LLC, this business that we have, as its own entity. That was the most important thing for us, and it leads to credibility, legitimacy. We treat it differently. So right now, I had mentioned before that we're in New Orleans for the National Cattlemen's Convention. And, maybe before it might have been just a fun trip to take. But now that we have this LLC and this business and we're trying to grow it, we're here for business. Like, we're here to look for equipment. We're here to learn more. And it changes how you think about things when you have that business that you need to take care of. And so because we're thinking of it as a business, we have our personal finances and this LLC separate. So with the LLC, we're able to get an EIN number and open our own banking account. And so we have an accounting system that we're taking care of and managing. When we sell animals, that money is deposited into our business checking account. When we have money coming in, it goes through that checking account. So we're not commingling our funds, and that's really important. And we're thinking of it as a business. So because it's its own entity, we have to keep it going, right? We have to keep it sustainable. It has to be a sustainable business. There has to be money in that checking account to pay bills and all of that stuff. So we're thinking a little bit differently than we would if we were maybe using our personal checking account to pay for things and buy things and all of that stuff. Another benefit and reason why we have an LLC is because of the liability concerns. So having a farm or a ranch, it's dangerous. like it had been mentioned before, like you can have cows get out onto the road, things can happen. And so we were able to get general liability insurance, and that protects us. And then the taxes portion, I think we're still trying to figure out what those benefits are. So I'm glad to be here on this webinar today. So that's another benefit that we're still trying to realize. But we don't come from a lot of financial wealth. We have a lot of wealth in terms of our family and experience on the operational side of having cattle, but we don't come from financial wealth. Like we don't have generational wealth, like money to pass down. So I think that a large part of what we're doing here is trying to build wealth. Ultimately, our goal is to have a piece of land that we call our own, and we're managing our own cows and doing all of that stuff. So that's really important for us. And hopefully this business can be flexible and change with those needs as that happens. But yeah.
Awesome.
Thanks it in a nutshell. Yeah.
That's a great synopsis, and really good reasons. So we're going to switch over to Nick Makoche, and Nick made the decision to start a nonprofit. So, seemingly different, but on the day-to-day, probably some similar realities. So why did you choose to become a nonprofit, and how has that affected the course of your operations?
Well, good afternoon, everybody. Hopefully you guys can hear me. Well, I chose to start a nonprofit because that's what surrounds a lot of reservations. Is they have a lot of service organizations that exist, and business, like everybody's talking about. Small businesses are really far and few. And what my reasoning for starting a nonprofit is because of the different systems that have to be created on reservations. We have smaller businesses, but smaller businesses are basically like siloed businesses. And so for my focus through all my work is around food systems development. And so within food systems, it's a web, it's a web of microsystems that need to be connected. And I thought that, I've been a nonprofit since graduating college and coming back, but even then, like I said, nonprofits existed on reservations for a long time already, as service organizations. And so in thinking about developing a nonprofit organization focused on local food systems, I thought of the systems that need to be created: educational systems, food hubs, other microsystems that can actually help support businesses, train towards businesses, provide businesses, and really connect the food systems that we need. Because we have producers here, and here on the reservation, it's a cattle-driven economy. But the thing about it is that a lot of the producers, they just beef up the cattle and then they ship them out. And so we really don't have this connection of systems that actually we can take that livestock, even if it is from chickens to cows, and create an added value process, and really start to create those chains so that we can create economy, profitability, revenue, developing of taxes and stuff. And so my focus on having a nonprofit is creating these microsystems inside a system that used to exist generationally, historically, on reservations, because we're basically just we're regenerating a system that once existed, and now we have all of these tax strategies for creating wealth or being able to keep the money local. And so with a lot of that process, it's understanding like the economy. Here on this reservation, I can roughly say over $150 million gets pumped into this reservation, but it leaves because we have nothing to attach to. And so looking at with like the nonprofit way, I see opportunity in being able to build those foundational systems so then that we can start to capture not only that funding, but also be able to support cattle companies, processors. But we're doing that, we're doing that in a systemic way, because that's what we don't have. Because you guys are talking about like land leases. I mean, being able to have a tax identity to pay for leases and stuff. I mean, especially within tribal lands, there's always this. There's lack of education. There's lack of education to accessing leases, but also when we start talking about business development, there is still a lack of education around business development. And so that's what we have to focus on, is all these key microsystems towards building economy, toward developing social, the social context, the social understandings. And so for the nonprofit, we focus on five key strategies, 5 key initiatives of building place and space, developing a food hub, but also we've been able to take tribal allotted land, which is the hardest thing that you can get, and turn it into business land. But we've been able to do that. But it's a 3-year process that it took me to take land and turn it into business land, and now we have business land. Farm production land, we have to work with the tribe because fee land or deeded land is far and few, especially on our reservations. Plus, it's also tied up in the political roundtables and stuff. But as a nonprofit, I really see not the benefits of being a nonprofit, not only with the tax structures, because we want to be able to capture the money and start to build the systems so that we can cycle that return. So then that we can buy cattle, we can support the cattle, and the cattle can buy from grains and cooperative, so that the money stays within the economy. So that's what we're starting to understand and develop towards, that our supportive understanding and our education is connected to the training, to the aspect of to the access of the place and space, the training, the place and space, and the connected systems that we need in order to build local food systems. And I really felt that a nonprofit entity has the opportunity to do that, and also to be a entity that we can be able to bring in more funding, on a more national level, and build the space that we need to revitalize, our once thriving food systems anywhere in a model system.
Great. Thanks, Nick. I like the idea. This course is really geared around understanding how individual businesses can operate slightly differently in order to keep that money on the reservation and in the community, but having the sort of the hub of a nonprofit to work together with to support those businesses, that is a vital model as well. So working together there. I want to transition to questions. We have a little more than 5 minutes, and we have a couple already going on in the Q&A. We have successfully enabled chat, so you can throw questions in there. And we also have the Q&A feature. There's a few that have been answered by our educators. So I encourage you all to open up the Q&A panel and go look at the answered questions in there. There's one that is not yet answered that got swept aside real quick that I want to address, which is wanting to get more information on cooperatives for tribes. And if we can have all our educators turn your video back on, that would be great. So in terms of cooperatives, we debated doing an entire course on cooperatives, but IAC has actually already done a pretty solid presentation on cooperatives. It's inside of the Mighty Networks. And I think it's also in YouTube too. So that's just one resource that I can point out. But I don't know if any of our educators want to speak to co-ops real quickly.
Brooke, do you want to take this one?
Hi, so we've done some collaborating with New Mexico Coalition for Co-ops, and we would love to meet further on it. Rachel, did you have some more input when you were talking? You had worked with a couple of our members on co-ops, right? Sorry about that.
Not too much. We haven't done any like specific work with our clients on co-ops. So I guess what we can say is, or what we can ask is, what do you want to know? Because there's a variety of different aspects of what we want to look at when it comes to tribal co-ops.
So I think,
Let's see.
That question was from Guy. Guy, I don't know if you want to type a couple more things or get more specific on your question. We'd be welcome to address it. And maybe while you're doing that, I'll go ahead and call on Catherine. Catherine, you have your hand up, so you can go ahead and talk and ask your question to the group. Catherine, you still have a question? Maybe not. Okay. All right. Anyone else? Then we move on.
Because Olivia, I might want to,
yeah, go ahead.
if I could, on the co-op side, I've done some very, very basic presentations on that. I know that if you know Trent Teekstrom down at University of Arizona, you might want to reach out to him. I know there was a person that was heavy into co-ops at University of Arizona, and that might be a good place to kind of start that discussion.
Great. Thanks, Rob.
I can put the coalition as well in the chat, Olivia. Sorry about that.
That's awesome.
Yeah, we had been meeting with, and I do believe we had some members meet with them. Rachel and I didn't one-on-one meet with them, but we can get in touch with them and maybe see if we can do any partnerships to provide more information. So I'll put it in the chat for you.
Great. Thanks.
Yeah. And I just want to add on, like Rob shared earlier, co-ops are formed into response of economic needs. So maybe getting all those things together, Googling things that, that form a co-op and that benefit a co-op, and, present that to your, whatever tribal council that you have, and, go from there. It's all different on how you register and process that.
Yeah, and like I said, there is that webinar. I'm looking for it in the background, but I can't seem to find it right now on the web. But go and check out IAC's past webinars inside of Mighty Networks, and you'll find it. And at least maybe you can drop the Mighty Networks link back in the chat real quick. And we have a request from Catherine to do another webinar at cooperatives. Okay, thanks for the input. We'll definitely consider it. It was on the long list of our 30 plus courses that got the axe. But if y'all are interested, maybe we can regurgitate some of that information and give it some new life. All right. Anyone else have any other questions? Craig, all right. You have your hand raised. You can go ahead and talk.
Hello. This question pertains back to Nick. As a nonprofit, were you able to kind of create any kind of funding system to support like the workforce of any of these MPP projects or anything, or any of your food sovereignty projects? Because it seems like that's like you're talking about the non-education of just land, marketing, different strategies. But were you able to create any kind of opportunities for funding to support workforce on your reservation?
Yeah, no, great question, Craig. Right now, what we are doing is, what I forgot to add on is that we have a mobile poultry processing unit. It's the only mobile processing unit for poultry, basically in a 5-state region here, that we have access to. And with the access to like this vertical integrated system, this bottleneck system, that we know, COVID has impacted both nationally in the food markets. We have a mobile poultry processing system that we're moving towards inspection. And so with having access to such a system, we are working with community members to educate and train. So educate and train how to raise poultry for the focus of not only food security, but also food sovereignty. But also we're educating the next generation of producers around small scale livestock producers. And it's giving the opportunity for them to understand where their food comes from, but also it's building that next steward and that next entrepreneur that can be able to tap into a local food system by way of having a processing plant and an educational system. And so we're designing this system so that not only they meet the need of a local food system, but also that they meet the need of the entrepreneur, of the education, and of creating access and opportunity for our community members, because our overall focus is on local food system and creating model food systems that we can share out with other with other communities of need. And so our focus is on the understanding of a square foot and how you utilize that square foot and then grow with that understanding, because 2.7 million acres on the Pine Ridge Indian Reservation, 300,000 acres of agricultural land, has huge opportunity in its access, but also within its design. And so we are educating the community and creating opportunities for them to get involved, and funding that on a nonprofit level, and doing that within funding from philanthropic, public and private, and then also eventually creating those opportunities to fund on a more public level with donor databases. So there are strategies to a lot of this, and we're trying to access and develop every strategy that can support the organization towards the overall goal of community social change.
Thanks, Nick. Thanks, Greg, for your question. And I think we're pretty much at time. So Rob, if you want to go ahead and drop our last little slide, our contact slide, so everybody can see folks' emails. We've also had most of our educators drop them in the chat. So real quick, here they are. And Like I said, the presentation will be uploaded to Mighty Networks as well with live links from the PDF. And we encourage you guys to be in touch. And I'm just going to put mine in here as well, because I encourage all of you to give us as much feedback as you are able to about this and all future webinars. And I just wanted to also let you guys know that as a follow-up, we'll be sending an email to point you towards Mighty Networks as well. And there'll be an evaluation in there. So we would love your 1-minute response to how this went and allow us to help make all of our success webinars as awesome as they possibly can be. So with that, I would say thank you to Aaron and Rob and Brooke and Rachel and Nick for your time, and to all of you for sticking with us for the whole thing. And we hope to see you. Our next webinar is actually next week on leadership and entrepreneurial skills. And we hope to see you there. Thanks, everybody.